Basic market structure is a fundamental and typical knowledge every beginner trader needs to have in order to effectively understand market structure and advanced market structure. Hello, my name is Fortune and I will be your favorite trading tutor. I just created this channel to effectively teach beginner traders, struggling traders how to become profitable in the trading of Forex world, right? So without further ado, let's get straight into business. Now, market structure or basic market structure. The market moves in three major directions. It includes number one, the bullish direction or uptrend, number two, the bearish direction or downtrend, while number three, the consolidating or sideways movement. These are the three major directions in which the market moves. Now, let's pick the first one, bullish or an uptrend direction. For a typical bullish direction or structure, we want to see the market continuously breaking structures to the upside just like this, or moving up continuously. This is a typical example of an upward movement or an upward market or a bullish market. Now, the logic behind this bullish structure is this. Let me give you one rule that you must always follow when marking out your bullish structure. Now, always focus on the most recent low like this. Mark it out. This, for price to respect or continue this uptrend, price must not come back to take out this low. Price should trade back into this level and then continue moving to the upside. And when price break another structure, you move this line to the upside just like this to the current low, and price should not come back to break below this level. So this is just a typical example of an uptrend movement whereby price is continuously breaking structures to the upside. Now, the number two, the bearish direction or downtrend. The bearish is just the opposite of the bullish, right? Let me draw it out. The bearish market is a market that moves downward, breaking structures to the downside continuously. And same rules also apply to the bearish. For price to continue this downtrend, it must not take out this current high or most recent high, right? Price should trade back to the level around here and dump. So this is just a typical example of what a bearish market. It is not difficult. Now, the consolidating market or sideways movement is just so simple. This is when price is neither going up nor coming down. It is just consolidating at a particular axis just like this. Please let's pay attention. Just consolidating just like this. So it is very, very simple. Now, when we have a consolidation like this, price will not consolidate like this forever. And when we have a bullish structure like this, price will not be bullish forever. And when we have a bearish structure like this, price will also not be bearish forever, right? Price cannot just be like this till eternity. Price cannot keep going up till eternity, and price cannot keep going down to eternity. So what happens if price refuse to stop consolidating? What happens if price refuse to stop going up, and what happens if price refuse to stop going down? Let me give you first example or first explanation on this. Now, for a consolidating movement, we always expect a breakout. We don't have a precise, like we don't know the precise direction where price is going to break out to, right? Let me mark it out. Let me draw a box on this consolidating phase, right? So this is a typical consolidating phase. So if price is consolidating like this, it means that the buyers and the sellers are dragging. They are fighting for who is going to be in control of the market. So at this point, it is advisable for traders not to engage themselves in the market because you don't know who is going to win the fight. So until you see a breakout from this zone, that is when you can be sure that yes, The buyers is now in control or the sellers is now in control. So if we have a breakout to the upside, means that the buyers is now in control, and then we can start looking for a buy to the upside, which indicates that the price has switched towards bullish, right? And if we have a break to the downside, it means that the sellers is in control and the market wants to switch from this consolidating phase towards bearish phase. So it is just so simple. So now, what happens if price refuses to what? Buy or keep buying? Or what happens if price refuses to keep selling? This is going to lead us to the next topic, which is what? Basic change in market direction. Basic change in market direction. Like I said, the market will not always move in one direction forever. At some point, it is going to change. At some point, the buyers will get tired of buying and they would want to sell, right? So what happens? Let me explain this for you. A change in market direction occurs when price has overbought or oversold, leading to a shift in the direction of the market from either bullish to bearish or bearish to bullish. It is so simple. So we have two phases of basic change in market direction. Mind you, all these things I'm teaching you are just basic. The two basic change in market direction include, we have the bullish to bearish phase or change in market direction, and we have the bearish to bullish phase or change in market direction. Now let me draw out what it means. The first example I gave you guys, I gave you a typical example of a bullish structure where price is buying to the upside, just like this. Pay close attention. Now what happens, and I told you that for price to continue buying, each of these lows must be respected. Each of these most recent lows must be respected, right? So what happens if price refuse to stop buying and then traded all the way down to take out this low? This becomes what? A typical like a typical example of basic shift in market direction. Now price wants to switch from this bullish trend to a bearish trend, and then when price do this type of thing, we want to expect price to then continue selling, indicating that the sellers are what? Now in control of the market. It is very simple. Same thing applies to the bearish to bullish phase also, where we have price was selling to the downside, just like this, selling to the downside, and then we saw a push to the upside. Ideally, price was not supposed to what? Take out this high if it wants to continue selling, but now price has taken out this high. So so this is a clear indication that price wants to start buying, or the buyers are now in control of the market. So we want to see this push to the upside, push to the upside. So now this is a typical example of what? Bullish to bearish. This is it, bullish to bearish, and this is a typical example of what? Bearish to bullish. So it is not a difficult thing to understand. This is basically what you need to understand about basic market structure. This is the foundation of everything you are going to be learning about market structure. And trust me, you need to stick to this page because I'm going to teach you a lot about market structure, how to navigate the market like a pro. So do make sure you subscribe to this channel, like this video, and drop a comment. Now let's jump to the real life charts so that I can show you everything I just explained. Let's jump to the real life chart. All right, perfect. So this is CHF right? Let me just do a quick chart examples of an uptrend, downtrend, shift in market direction, or change in market direction, like I explained in the diagrams I draw for you guys. So this is a typical example of an uptrend market. As you can see, this pair has been going up right? It has been breaking structure to the upside. This is like, let me just start from here. This is like push to the upside, break of structure, break of structure, break of structure. You can see everything I explained to you is what I'm going to be using to mark this, right? Break of structure to the upside. Now let's look at something very important. You can see how the price has been breaking structure to the upside, right? So I gave you a particular rule and I said when you see a break of structure, the first rule that should come to your mind is this: price should never take out the most recent low that caused the break. Now if you look at each of these break of structure, this was a break, this was the low, price didn't take it out, we had another break, this becomes a low, price traded back, did not get to this low, push to the upside, push to the upside, price gave us this low, did not take it out, push to the upside, price gave us this low, did not take it out, then push to the upside, push, you can see, push to the upside. And now we have this as what? The current low, right? And you can see how price is already reacting off that zone, right? Price is already reacting off that zone. So maybe or maybe not, but there's high chance that price is going to push again to the upside to break another structure just like this, push to the upside and then break another structure to continue this bullish structure. And if price doesn't want to continue this bullish structure anymore, then we are going to see price trade all the way down to this level, take out this current low. That's to show us that price wants to start selling, right? So same thing also applies to the bearish, the same rule, like the same rule, the same everything. Now let me show you another example on another pair. Let me show you. I think it should be on euro card. Quick one, sorry. Perfect. So on euro card, sorry, I've had a lot of analysis here, but let me just quickly wipe them off. Let me wipe them off, right? Let me wipe all of this. So on euro card, let me just do a quick explanation. You can see we had this break of structure, this break of structure, this break of structure, this break, this break. Let me just mark it out for you guys to see. So this price is currently moving up, right? At this point we had price moving to the upside. So now this was the last break of structure, just right here, last break of structure, and this was the most recent low that should not be taken out if price must respect this uptrend. But now you can see how price took it out. Price violated this low, and then you can see what I taught you previously. Price traded all the way back and then dump again, switching bearish. You can see price dump, dump, and then price has currently traded into this level again and is now dumping to the downside. Hopefully we are going to get a push to the downside to continue a bearish structure. So this is how this bullish structure switched to bearish structure. Can you see? So everything I explained to you happens on the chart. So now I want you guys to go to your charts and study more about this, right? And I will catch you in the next one. Peace out.